Gold still holds the monetary high card, as it should, really. Gold's been recognized as money and really nothing more than money or jewelry for thousands of years. But if we took all the gold away tomorrow, basically nothing would really change. But if we took away silver tomorrow, everything would change. Everything that we have on our computers in the electrical or electronic world depends upon silver. It's essential. It cannot be replaced.
Welcome back, passionate investors. I'm your host, George Roberts, the author of Passionate Living Through Passive Investing. And today I'm honored to welcome a true titan of the precious metals world, David Morgan, founder of the Morgan Report and one of the most respected voices in silver and gold investing, known as a silver guru. David has dedicated over 4 decades to analyzing global monetary trends, mining equities, and macroeconomics. He's advised governments, hedge funds, and individual investors, including many high net worth individuals, on how to protect and grow their wealth through strategic resource allocation. Through the Morgan Report, David provides in-depth research that goes far beyond metals, covering energy technology and hard asset investing, all with a focus on capital preservation and outsized returns. He's a frequent guest on CNBC, Fox Business, and international finance media, and the author of the Silver Manifesto and Second Chance, How to Make and Keep Big Money from the Coming Gold and Silver Shockwave. Now, as we record this episode, commodities are at a 50-year low with respect to the S&P 500, and the critical gold-silver ratio is topped 100. So if you're serious about protecting your portfolio in an increasingly unstable world, this is a conversation you won't want to miss. And now it's time to bring on our guest, David Morgan. Welcome to the show.
George, great to be with you. Thank you.
Well, and thanks for coming. And I just want to say that was my introduction. And now I'd like to give you the opportunity to introduce yourself by asking the question, who is David Morgan?
Well, you have passionate in your title, and I would like to say that I'm passionate about what I do. I feel it's my duty or calling. I felt that way from a very early age. I've been doing it, as you read, for over 4 decades. And really, I think one of the highest forms that you can have in humanity is to be of maximum service to others. And it's that paradox of, in a way, serving myself, but serving others at the same time. The portfolio that I have in the membership site for the Morgan Report is basically what I invest in. People kind of look over my shoulder what I'm doing. It's not just gold and silver. Those are the primary objectives at the current economic conditions, but we've looked at rare earth elements before people even knew what rare earth elements were. We were early on the battery metals, copper, lithium, some technology stocks, now and again an energy situation. So we cover the gamut, but it's from a big picture down kind of an analysis. So we go from the top view all the way down to some of the more speculative investments, particularly in the mining arena.
Yeah, beautiful. Well, I would just love to talk about commodities. And I know you mentioned a lot in your newsletters and in your books. And first of all, I just want to say, enlightened self-interest, great way that you're serving yourself is at the same time you're serving the community, great resource out there. What are some of the most important commodities that you see here as we record in mid-2025?
Well, right now, of course, nothing happens without energy. So this is one that's extremely important for people to understand. And right now, there's been a big push for green energy. However, my first degree is in engineering, and having that kind of a mindset and logic thought pattern. If you really dig deep into solar panels and windmills, some of these things are really not very efficient as far as energy return on energy invested. And this is a problem as an engineer. Like, I want the best for everyone. But if we have a windmill as an example, when is it payback? When, if all the energy that it takes to put one together, put it up on a hill, cement this huge amount of concrete into the ground so it doesn't blow over, et cetera, are we really being efficient with our resources to get this quote unquote renewable energy, especially from the fact that both solar and windmills do deplete over time. A good solar panel may be good for 25 years, but 25 years or approximately there, you have to replace it. So it's not indefinite. The windmills really don't live to their lifespan that was projected. And I'm not trying to bash free or green energy.
Right.
What I'm trying to explain is I think differently than most people outside the box. So the last statement, George, I'll give it back to you is, look, we're going to have energy, natural gas, and coal for a very long time, much further than many, let's say, of
Yeah.
the green persuasion may think.
Yeah, 100%. A huge fan of the environment myself. I'm a biologist. That was my first degree and love the environment, but we have to take a full accounting of things. And I think, unfortunately, a lot of, the green energy is just driven by emotion, perhaps, rather than hard numbers. I think probably ethanol may be the best example of that. But we're here to talk about things that are really, really working and things that we need to sort of keep the lights on. You mentioned being one of the early analysts to point out the importance of these rare earths and particularly I think lithium. It's important. I mean, we are transitioning our economy, et cetera. Can you tell us but again, like what are you focusing on? Obviously, you focus on silver and gold, but what do you say are the best things to invest in right now?
Well, I think, again, going to the big picture analysis and working down from there, is there's a shift taking place as we speak. First of all, the global economy is actually contracting, it's not expanding. There are areas that are expanding, but globally, with the tariffs, the trade wars we've seen in the past,
Mhm.
and basically a recessionary environment, we're seeing less and less per capita output. Now, the most important things are, as I said, energy and food. What I'm focusing on is in a contracting environment where people are more protective, becoming less global and more national, we have to look at what's important to them. And that is, of course, their individual situation and they want trade to carry on. One of the most important things in the commodity sector is what you said earlier, it's at a 50-year low. So the shift is going from what I call paper assets, which are stocks and
Mhm.
bonds, your equities, and your government sovereign debt into the commodity sector. Because we're going from a situation of things that we want to things that we need. We need energy, we need food, we need the metals, base metal and precious metals. And so that shift is like turning a ship around. It doesn't happen overnight, but we're starting to see the ship turn and we're starting to see more and more interest in the commodity sector. You take some of the brilliant minds from the hedge fund community, Ray Dalio comes to mind. There's others
Mhm.
that are really promoting the situation at hand and why gold is probably a good place to look as a barometer for what the future holds on a global basis.
Yeah, gold, obviously the quintessential safe haven asset. Well, let's talk silver. I think recently you mentioned in the Morgan report that I think this is the fifth straight year that silver production is constrained. I would like to sort of dive deeper. What are the most important fundamentals driving silver prices today?
Well, first of all, I'd like to just work around it a bit, George. And I just finished a speech as a keynote at the Money Show in Las Vegas about a week and a half
Mhm.
ago. At the end of that speech, I talked about the two metals, gold and silver, two precious metals. And what I said at the end of the speech was that gold still holds the monetary high card, as it should,
Mhm.
really. Gold's been recognized as money and really nothing more than money or jewelry for thousands of years. But if we took all the gold away tomorrow, basically nothing would really change. But if we took away silver tomorrow,
Mhm.
everything would change. Everything that we have on our computers in the electrical or electronic world depends upon silver. It's essential, it cannot be replaced. So, that idea of really the use of silver in a technological world is paramount to understanding that it's really undervalued for the workhorse that it is, because not only is it an industrial need, it's also a monetary metal. And to make that argument a little stronger, George, the word money and the word silver is synonymous in all the Romance languages. So, coming back to your specific question, number one is really solar panels. That has been the big driver for the last several years. More and more countries are looking for the alternative or green energy, and solar is the one that's the most readily adopted. And we've gone from what we call thrifting, where you go back 25 years, where we kind of started in the solar industry, and every year, more or less, on average, you use less silver per panel with the same kilowatt output. That carried on for, as I said, probably 20 years or thereabouts. But recently, we're actually using more silver per panel, but getting far higher kilowatt output. So, in other words, again, energy return on energy invested, it's been determined by science that if we use this much silver per panel, we're actually getting the most efficient, best production of electricity possible. So this is actually good kind of a wake-up call for those that study the silver industry. Wait a minute, we're actually using more silver per panel now than we have in the past. That's key. There's so many others. There's more patents on silver for use in industry than there is any other commodity except oil. Oil has more patents, plastics, I mean, just think of all the patents on plastics. It's an oil-based product, asphalt, tires, and on it goes. But the next most important commodity, as far as usage is concerned, would be silver.
Right now, perhaps to put a finer point on it, because silver has industrial uses, I believe that you've pointed out, I think half of all the silver that's ever been mined is now back below the ground, unlike gold, which is essentially continuously recycled. Any other differences between gold and silver that you'd like to point out to our audience?
Well, I think on the monetary side, something that's not a great, discovery. But if you look at a chart on the gold silver ratio or what gold and
Yeah,
silver did from the 13th century to current day,
right.
you'll find that the gold silver ratio stayed at 20 or lower. So what that means is that 20 ounces of silver would buy 1 ounce of gold,
Mhm.
sometimes 16, sometimes 12, but no higher than 20 up until the last 150 years. So if you go back to recorded history, we're looking at, 4,000 years or so. And I thought, well, what's that all about? And what it's all about is they both were one thing and one thing only. Up
Yeah,
until the 1800s or so, they were both money and only money. They weren't,
right.
silver wasn't anything else. And then with, electricity and all that's happened since then, and the bankers taking silver out of the monetary complex in the 1873 legislation, silver's been kind of designated as not only inferior to gold from a monetary aspect, but really nixed as a monetary metal, although many people still look at it as at least a safe haven, if not a monetary metal, or at least an investment in metal. But that has been something that has really garnered more and more uses for silver, as I outlined earlier. So we have two monetary metals up until the last 150 years or so, and now we basically have one. And even gold, as much as it's recognized by the central banks worldwide, really is not played up very hard. You don't hear about gold as money on any of the mainstream financial channels. You might hear about it from a commentator such as myself from time to time, but
Right.
it's not stressed because Wall Street prefers equities and bonds over anything in the commodities sector, especially gold or silver.
Sure, that's where they're making their money. But we have, again, a super high ratio. Like, I think recently it hit over 100. How high can it go? I mean, obviously, more and more industrial usages could continue to tip things. I mean, it should actually help to make it more valuable. I mean, when do we actually really turn around? I should actually rephrase the question. When do we turn around and see things reverse?
Yeah, right now we've seen as the gold silver ratio get as high as about 125. It's done that a few times, and in all cases, it's come down rather
Right.
quickly. So these were, you could call them anomalies, not that it didn't get to that ratio,
Pandemic, etc.
didn't stay there. As far as where we go from here, it's very interesting because we've been in a silver deficit for the last 4 years. And that
Hmm.
deficit is projected to continue over the next 20 years and continue to increase. So, in other words, if the average deficit over the last 4 years has been about 200 million ounces a year, then it continues to increase over the next 2 decades. In theory, when are we going to run out of silver? What's
Right.
interesting about that is theoretically it could be as soon as 3 years from now. Now, we're never going to run out of silver. I mean, the
Right.
marketplace is going to make more discoveries. There may be a substitution, which there is in some elements, and that is
Hmm.
graphene, which is less economic than silver, but there are some places where that would work. But the point being is that we really see silver becoming more and more of a scarce metal, yet the gold silver ratio has not reflected that yet, and it will at some point in time. So the savvy investors are really moving out of gold or swapping gold
Hmm.
for silver. Now, central banks don't recognize it as money, and that's where most of the gold is being accumulated at the present time. However, there are people that are waking up to silver, and one of those is the USSR, I should say Russia. Russia
Right.
actually started to buy silver in commercial bar form for strategic purposes.
Yeah, and I'm glad you mentioned the geopolitical angle because maybe there aren't a lot of people on Wall Street mentioning gold as money or as much as you might expect, but there are some places in the world where gold and other precious metals are being very heavily accumulated. So any comments on that?
Absolutely. If you look at India, they've always been, I don't like to use the word hoard, but they've been accumulators of silver for centuries because
Right.
they have lived through the knowledge that the government printed quote unquote money loses value and it can be reinstated at any time. And so the savings for the general population has been like silver bracelets or silver jewelry. And I might make an aside here very quickly to digress, George, but in the East, you basically buy precious metals by weight. So if you're in the Middle East, like in Dubai, or if you're in Asia anywhere, you're buying the artwork for practically nothing. Whereas in the West, if you buy a gold bracelet or a silver ring
Mhm.
or silver earrings or whatever, you're going to pay a huge premium for the art value of it. But in Asia, that's not true.
Yeah.
Coming back on point, so you see necklaces or particularly bracelets, and that was silver, silver, silver up until the last probably 2 decades, where India became more and more wealthy and really
Hmm.
formed a very vibrant middle class. And they switched to gold. Gold is more
Right.
valuable per unit. An ounce of gold is, worth 85 times an ounce of silver, present gold silver ratio.
Right.
And it's just easier. Plus the dowries are, gold really, if you can afford it. And they can afford it more and more. However, they've come back to silver recently. But gold is really known by most other nation states as a protector of wealth, as a way to
Mhm.
save rather than save in your local currency, much more than the North Americans do.
Yeah, huge on the cultural angle there. I mean, I know that you really just can't have a wedding without gold. People expect that in terms of presents. As far as hoarding, nothing wrong with hoarding gold. A lot of the items here behind me, my couch, I cover that in gold and some pieces that are off camera, but definitely love gold. Um, so let's see if we can kind of go a little deeper into the geopolitical world. I sort of alluded to the uncertainty in the investing world, something you discuss in depth in your book, Second Chance: How to Make and Keep Big Money from the Coming Gold and Silver Shockwave. So, as regards the geopolitical climate, so what are the largest shock waves that investors should be looking out for?
Well, one, I love to work on facts with my, engineering background. And one of the biggest facts that isn't really stated very often, unless we're blessed by having a podcast like yours, is what happened with this whole Ukraine thing. And what
Hmm.
happened was the United States government decided to basically make null and void the $300 billion that Russia had on account. They basically told the world that unless you agree with us on a geopolitical basis, we can freeze
Yeah,
your account. That to me was one of the biggest financial mistakes made over the last probably 50 years or so, because it was a huge
right.
wake up call to all other nation states that scratch their head and say, hey, wait a minute. What happens if the US doesn't like what we're doing geopolitically? Will they freeze
Right.
our money as well? And that's when you started to see what I call the run to gold really begin in earnest. That's
Hmm.
when central banks started buying and accumulating gold over the last 3 years or so at a rate that we hadn't seen for about 50 years. And it's, I mean, you can make up your own mind, but most of the gold analysts will tell you what I'm about to tell you, and that is there's some fear out there in the geopolitical realm that says, look, if they did it to Russia, maybe they can do it to us. We'll get gold. It's exempt from geopolitical influence. It's been money for thousands of years, and it's outside of their system. It's away from, let's say, the SWIFT system or any other mechanism that is used in international trade.
Yeah, 100%. Can't agree with you more on that. We had some other commentators on the show, like Chris Galizio, have mentioned. Just seriously, what a great wake up call that was, or maybe not so great for us, benefit from dollar dominance. let's see. What about the Belt and Road Initiative? Speaking of competitors to the dollar, China, I think, would at least they'd like to top the list.
The Belt and Road Initiative has been around for quite some time. And really, if you go back to when it started, centuries ago, you're looking at really the Chinese having a very big pathway into Europe. Really, now it's global for their goods and services. And of course, now we have the formation of the BRICS, which took place years ago. And as you know, George, it's all of Russia, India, China, South Africa, and many more. And these countries get together and they're trading in their own currency. So they've circumvented a dollar. For example, if you go back to the Kissinger years in the 70s, basically the US made a deal with the Saudis that said, look, you have to purchase oil in dollars only. And that was upheld for a very, very long time. And a couple of exceptions where other nation states were trying to circumvent the dollar for oil purchases had an early demise. I'll just be polite. But now that's gone. So the Russians will trade with the Chinese in each currency, or the Indians will change in the currency. And this has really lowered the amount of dollar dominance that we've had. You go back about a decade, roughly 72% of all transactions were done in the dollar. Right now, it's about 58%. So we're still the majority, but not as big a power as we used to be. And that will continue. Now, there are rumors that the BRICS will come up with their own currency, and it may even be gold backed. Certainly, I'm watching that closely because it is part of my job. I think it's more rhetoric than reality. I do think that they've already solved the problem by just accepting each other's currencies. But as we push further into the digital asset world, commonly known as cryptocurrencies, we really don't know where that outlier lies. And there may be something in the works. There's something in the works now. How it manifests exactly remains to be determined.
Yeah. Well, so we were talking about the market and how the market's not going to let us run out of silver. Well, obviously, that missing link is the mining companies. So if we could discuss maybe some of your favorite mining companies, or if not, at least how do you analyze these mining companies? What are you really looking for?
Well, it really got me interested in this sector was, sound monies and the principles of honest finance. But as you get deeper into it, where does gold and silver come from? Well, obviously from mining. And I like to give the analogy of, would you rather have the golden egg or the goose that lays the golden egg?
Yes.
And that's a reference to the mining companies. So in a bull market, the leverage in the mining companies is about a 3-to-1, which means if you get a 10% move in gold, you get a 30% move. And I'm talking top tier, cash rich, unhedged mining companies. So that's a conservative blue chip. You could get more leverage than that going down to a mid-tier, a junior producer, or an exploration company. But that is much trickier to do. So we started with a clean sheet of paper. And I said, how am I going to invest if I start a newsletter? And I started with the best of the best blue chips. And then we moved down from there. And what I discovered, and it wasn't that well known at the time, was that the streaming and royalty companies have the best business model. And because of that, they have a lot of risk that they mitigate. First of all, they're basically financing companies, but they're financing mostly precious metals. Not always. They can do base metals as well. And these companies basically set up a financing for a miner that's about to go in production, or perhaps is already in production, and they get part of the metal itself. And again, so much risk is mitigated because they don't have to go out and discover it. And their staff, the staff at Franco-Nevada, I'm not sure what it is these days, but it used to be like between 8 and 13 people. When you look at a multi-billion-dollar mining company and how many people they employed versus a finance company, you can see how much profit goes right to the bottom line. And so this is what we have particularly focused on from the inception of the Morgan Report. And it's really beneficial for the reasons I've outlined, and especially in an inflationary environment. For example, if let's say as a thought experiment, oil doubles like it's done before, well, most miners use maybe 20-25% of their input costs are energy. So if the 25%, or say 20, doubles, obviously your bottom line is going to be affected greatly. Doesn't happen to the finance company. They're still getting their original deal and they're pulling out a certain percentage of the metal regardless of the cost. So that's my number one objective. In fact, I'm putting a new one back in the Morgan Report for the August edition. It was an oldie but goodie that wasn't performing as well as a couple of the others. So I took it off the list. But recently they have turned their Robert Kiyosaki cash is trash. They had a great deal of a cash balance. They have put it into another very, very profitable mine in a royalty stream. And the deal is not consummated yet. So we're taking a bit of a risk here, but an educated risk to this company. And I'll name it. It's Royal Gold. If you look up Royal Gold and look at it, I mean, that company goes up every year. Does it go up and down? Yes. All stocks go up and down. But if you look at the overall, long-term chart of that company, you're going to say, geez, this thing outperforms gold. But hey, you know what? Kind of what David said, about 3-to-1.
Yeah. Well, I love it. And I love the angle of focusing on the productive asset, that is to say, the mining company, the goose that lays the golden eggs. Well, thank you so much, David, for taking the time to share your knowledge and experience with our audience. Just want to make sure everyone can do what's the best way to reach out to David Morgan.
I built a landing page for your viewers, and we do consultations. I'm actually going to give you a free one to your listeners, and it is at themorganreport.com/podcast. And that's all they have to do is go to the URL. If they just type in themorganreport.com, it'll pop up, put in a /podcast, and we have basically free gifts for you. And one of them is to talk with me, not one of my staff, just me, for 15 minutes if they choose to. They don't have to. There's another 2 gifts there that don't involve me directly that I think they'd be pleased to find out about.
All right, beautiful. Thank you so much for taking the time to share your knowledge and experience with the audience, David. It's been beautiful.